One of the big misconceptions about trading smart money concepts or supply and demand is there's just been a big run lately towards trading only lower time frames, right? Everyone's so obsessed at the moment with trading the 1 minute. Like if you can find someone on Instagram or on YouTube who's able to trade the 1 minute, you think that's more impressive than someone who can trade the higher time frame. And what I'm here to tell you today is that you can be consistently profitable just trading the higher time frame. You don't need the lower time frame. It's just the market is fractal in nature. So what I'm going to show you right now, and I've showed this in other videos, is basically imagine this as your 4 hour trend, right? So price is bearish. Well, on the lower time frame, let's say like the 15 minute, when this is bullish on the 15 minute, or when this is just a 4 hour pullback, the 15 minute actually goes bullish. So on the 4 hour, this is just a pullback to create a lower high, whereas on the 15 minute, we actually have a bullish trend. And then price will then go bearish, and then go bullish, and then go bearish, and then go bullish, and then go bearish, right? So all that's happening is on a lower time frame, we're having trend shifts, whereas on the higher time frame, it's just prices is making lower lows, lower highs. So then if you have this 15-minute structure, which I'm showing right here, you can imagine this is the 4 hour, this is the 15-minute. Now, if we were to break down each of these individual moves, right? Let's say this move here, right? This move here is the same thing as this. So now let's say this is the 15-minute, right? So this is just a zoomed in section of this. So now on the 1 minute or the 5 minute, you're going to see what? Prices in a bearish trend, and then we're in a bullish trend, and then we're in a bearish trend, and then we're in a bullish trend, and then bearish, etc. So what you're going to find is this is exactly the same thing, right? 15-minute, 1 minute. So all the only difference is the time frame that you're looking at. So just because someone can trade the 1 minute doesn't mean that that's inherently better, because it's the same thing. The order flow is exactly the same. Everything is delivered exactly the same. It's just dependent upon the time frame you're looking at. So every 1 minute candle eventually turns into a 15-minute candle, right? And then every multiple of 15-minute candles turns into a 4 hour candle. So what you see in a 4 hour candle is 4 hours of 1 minute price action. So it just gives you more information. It doesn't mean that it's better, right? Because then you have to have a lower stop loss to actually make more profit on the 1 minute, because you're just trading this swing, and you're 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 trading this swing. But the problem is that people don't realize, and this is what a lot of people like to show in videos, they try to make it look so simplistic, like, oh yeah, when price trends, it just does this. And like, yeah, in theory it does that, but that doesn't actually happen like that. But typically what you'll find is price will move like this. Maybe there's an order block here that you enter on, price goes higher, and then we do this, and then we continue higher again. And then we do this, and then price will continue higher. So what you'll find is many times price will have these, like say this is the 1 minute, right? This is 1 minute price action. Price will have this pullback or this move here, and you're like, well, price is bearish now. So let's say you start looking at this order block here, and then you take a loss. And then you look to buy here, and you take a loss. And then you buy here, it's a win. You buy here, it's a win. And then you look to buy here, and then it's a loss. And you look to sell here, and it's a loss. But you're like, well, price went bearish. Why are all these losses occurring? And that's typically what happens when you find on the 1 minute chart. A lot of these traders, they'll just show you their wins. They won't show you all of these losses that they took trying to catch that win. So it's not that anyone is inherently better. It's just when you're trading the 1 minute, you're going to take more losses. Why? Well, I'm going to show you right now. As I said earlier, you have to imagine, what is this? This is price bullish, and then we go bearish, and then we go bullish, and then we go bearish. Sorry, this should be like this. and then this. So yeah, as price goes bearish, what is that? That is a 5 minute. This is the 5 minute doing this. That's all it is. This is the 5 minute. This is what this looks like. This pullback here is just 5 minute order flow. So what you'll find is price will come down here to some order block and then continue the bullish trend. And what happens is you're looking at just the 1 minute and you're trying to sell here. So you're trying to sell here, which is the equivalent of trying to sell this. If you saw this in the higher time frame, would you sell this? No, because you would understand that price is still bullish. These lows are being protected and we're targeting the liquidity above the highs. And so typically what you'll find is no one is better or worse. Like if you're trading the 1 minute, you're just going to take more losses at a rapid pace, but you're also going to take more wins. And so what happens is you could take like 3, 4, 5 losses and you take 1 win, and then you just show everyone the 1 win you took. You don't show everyone the loss and loss and loss and loss you took getting that win. Is one better or worse? No, because if you trade the higher time frame, you will have less of these fake outs here because you're going with the trend of the higher time frame, so it's more consistent. Because you understand what's happening on a higher time frame. You understand that when someone's taking a loss here, this is just a bullish order block being presented, and you're not taking this sell because you understand that on a higher time frame that doesn't make sense. Now again, you take less trades, but you also take less losses, and they're a lot less rapid. So it really depends on your personality. You have to figure out what makes sense to you and how do you want to trade. Are you willing to take 4 or 5 losses in a day before you take a win, or would you rather have a less losses and more wins, but then you have to wait a few days for a trade or maybe a few hours for a trade? You have to kind of decide that. So what I wanted to share today was that, like, if you were to just trade for like 4 hour and 1 hour order blocks, you could be just as consistent as someone who's trading the 1 minute. Why? Let me show math for you. So what you'll find is typically if someone's trading the 1 minute, someone will typically trade 0.25% risk, and let's say they make 10% a week, so 40% a month. That all comes out to 10%, or sorry, we'll say they make 40R a week. That comes out to 10% profit. Whereas if I'm trading the higher time frame, okay, so why does someone want to use 0.25 risk? Well, because let's say you take 5 losses in a row at 1% risk, like you're risking 1% instead of 0.25%. Your account went down so much. Imagine if you have a bad week or something goes wrong or you just start having mental problems. You're going to take so much risk. Whereas like if I took 5 losses on this, I'm only down 1.25% on my full account. Versus if I'm risking, say, 1% because my strike rate's really high because I only trade the higher time frames, and then I make 2.5 R a week, which would be 10 R a month. You made 10% profit. So who's better? No one's better. There's no difference. We made the exact same amount of profit. It's all just about what do you like to do. If you like to trade every single day and you want to be at the charts, just like sitting there scalping and taking trades every single day, dealing with multiple losses, which some people do. Some people's personality can handle that. Or do you want to just trade a higher time frame? Like say, you follow trend on the higher time frame. Cool. Now we're bullish. And you say, okay, cool. Price hasn't broken this high yet, so this is my range. Here's the low. Boom. Place an order, and price runs. What is that? That's 5%. So you have 5, and each profit target is going to be at the high where the liquidity is, right? And then look, you have this big move down. So where's our next order block? Here. Price never makes it there. Then we break here, and you say, okay, cool. This is my full order block. Maybe I'll use like 50% of it, but I'm going to use this tiny zone maybe. And then look, you have a 6% trade. And it's the same thing as the lower time frame, right? All I'm doing is following structure and following trend, just waiting for price to tap into a zone at the edge and then just taking it, right? So that's 6%, 5%, that's done. If you're on 1%, risking 1%, you're done for the whole month. And this is a matter of, 2 weeks. And then price comes down here, boom, 6% trade. Well, this is your zone, misses it, boom, new zone, 6%. You're targeting the low, right? Price comes in, order block, boom, target the low where the liquidity is. Obviously in hindsight, you could be like, oh yeah, I could have made 9%, but it doesn't matter. And then let's say on the one hour, you look here and you see price break to the downside. This mitigates this zone, and then we get a break of structure, and then you look to enter here. And then what is that? 2.5%, right? You targeted this low. See how easy it is? But is that any different from me going on the 1 minute, right? Let me show you the 1 minute. Just find a random piece of price action. Is that any better or worse than me just zooming into a piece of price action on the 1 minute and saying, okay, cool. What do we do again? The last one we did this, right? We found an order block at the edge. We waited till price came in. We targeted the high and had our stop loss below this low, right? And we follow trend. So this is the same thing. Okay. Boom. Here's my demand zone. And you take a loss. So, right, this is our structure. We have high, low, price breaks here. So high, low, high. This is the edge. Boom, price takes a loss. Cool. Now we're bearish. So now price is bearish. And then let's see, where would the structure be? Here, here. And then maybe just, yeah, this is the thing. I would probably wait for some kind of imbalance, honestly, but we'll just pretend that we're just following the strategy. So look, you already took 2 losses. Now that's not a big deal if you're going to take wins, but can you handle those losses is the thing. Cool. And then now you have this new structure. So maybe you would take this or something in here and take another loss, so another -1. Right, and then you finally get what? Price comes here. This is your order block. Boom. You get your first win. Stop above the high, 1.5 pip, and then you target the low. So you can target the low or just say 5%. So look at that. You had 1 loss, 2 loss, maybe 3 losses, probably not, because trend kind of shifted here. So yeah, let's say this one is not, sorry, trend shifts here, and then we go bearish. So you could look somewhere in here for an order. I'd probably have my entry up here, so you get missed. But yeah, so there's your first one. So you took 2 losses to make 1 win. So you have plus 5% minus 2% is 3% profit, right? So you're in 3% profit for the day. Now, is that any different from me trading the higher time frame? Well, no. I mean, it's just willing to take, because this same thing is going to happen on the higher time frame. The only difference is this is going to take 2 weeks to occur. So I might take this loss, on Monday, take this loss on Wednesday or Thursday, and then take this win on the next week on a Tuesday. Now, there's obviously pros and cons to both. On the higher time frame, you might be like, well, I took 0 trades this week, or I took only losses this week. Are you able to handle that? Can you deal with that? Can you understand how that can lead into other things? And the lower time frame, can you handle 2-3 losses in a day and then 1 win? There's pros and cons to both. But again, as I said earlier, it doesn't matter because it's all the same thing. We're reading order flow. We're doing the same exact thing, right? Same thing here. Look, there's another trade. Price goes lower. This is the order block here, right? At the edge. And then price comes and breaks this low. So that would be our target. So 2%. So now you're up, 7% for the day minus 2%. You're up 5%. And then look, you're following trend again. Look what happens. Right? Price breaks lower. And then same thing, you target the low. Now look at that. You took 3 wins in a row. But imagine if you had woken up here. You would think that you're like amazing. You'd be like, oh yeah, I'm like a beast trader. I took 3 wins in a row. But imagine you didn't trade any of this and you just traded this. Or you traded this and then you stopped trading for the day because you're like, oh man, I took 2 losses. Like I suck at trading XYZ. Like I look at other people, they only take 1 loss. But a lot of times people aren't showing you these losses. And also, or they trade higher time frame. And those losses are more spread out. Whereas like you might take these 3 wins and these 2 losses, but if you don't allow time to play out for you to catch all of these trades because you're worried about XYZ thing, well then yeah, that's going to be a problem. And then look, same thing here. We play the edge, right? Because this is where price breaks. So where's the edge of structures? Here. And then you see what? Boom. Price comes in, taps that zone. And then boom. So you just, you're playing the edge. Look at that. And then price goes lower. Same thing, right? And then you see structure. We get a structure break here. Price goes lower. Where's your edge here? So we don't really get an entry. So yeah, this is, sorry, I missed over this. So yeah, this is 4% profit. So yeah, you're up like a mess load for the day. And that's what I was trying to show in this video is like, essentially, if you just keep following trend, it's exactly the same thing as the higher time frame. But in your eyes, you might think this is more impressive because you can look at, oh, this person made, 1, 2, 3, 4, and then a break even, 4 winning trades plus a break even. They might only show you this in a screenshot, but another day they might take 6 losses. Like this could be loss, 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 but they're not going to show you that because it doesn't look good. They'd rather show you all of these wins without the transparency of everything that occurs within these trades. You have to understand that there's going to be a lot of losses that are part of that. But a lot of people don't want to show this because it just doesn't look cool. And a lot of people get addicted to this because they'll see, oh my God, well, I want to trade and take all these wins because they think about that. They think like, I want to day trade because I want to make a bunch of wins every single day. But that's not how it works. A lot of times there's a lot of mental anguish that comes to that because you took loss, loss. Sometimes you'll have another loss and a break even, and then maybe you have a win. And it's like all that work for the day, mental anguish, you might have got like 2%. But then some days you have this where price is just amazing. So it's all about like understanding that everything is the same thing. It's the same thing as a higher time frame. Right? This is no different than I was trading on the lower time frame. Same thing, right? Price goes lower, right? We go to the edge, boom, enter. Same thing here, right? Price heads lower, we go to the edge, boom, enter. Price heads higher, boom, go to the edge, enter. It's the same thing and target the high. It's exactly the same thing. There's no difference. It's just a time, it's just the horizon that you're looking at. This takes weeks to play out, whereas on the 1 minute, it could take a day to play out. But you're going to have losses, you're going to have wins. You're going to have days where you take like 4 or 5 or 6 losses in a row. You're going to have days where you have 4 or 5, 6 wins in a row. You're going to have days where, you might take 3 or 4 losses and then 1 win. You have to be able to deal with that. So you have to understand what kind of personality do you want? How often do you want to be at the charts? Do you want to be at the charts every single day? That's what you really need to understand. And that's what I wanted to share in this video. So yeah, if you have any questions, let me know, drop them below, and I will talk to you all soon.